Thanks so much for tuning in to this talking point conversation or the quarter four earnings conversation. The issue with some of the companies where the expectations are fairly high is that at times a good performance, but not completely as per expectations performance, leads to a solid body blow on the day of trading. And I guess that's what's happening with Tata Power today. If you look at the quarter four numbers optically, they still look okay, maybe marginally below some estimates, but uh, almost in line with what the Bloomberg estimates were. And the stock is still down about 6-7%. The questions to Mr. Praveer Sinha as he joins us today are about how he sums up quarter four and the year, but more importantly, as we finish FY20 and step into FY23, which is uncertain, how does he see steering Tata Power over FY23 and arguably the years ahead? Mr. Sinha, great having you. Thanks so much for joining in. Hope all is well. How would you sum up quarter four, sir?
Thank you, Neeraj, for having me on the show. First of all, I think FY22 has been a great year. The quarter has been very good. And what is important is to see the underlying performance in each of our business. Our generation businesses have done very well. Our transmission and distribution have done very well. Our Odisha operations have stabilized. Our renewable business has done very well. We've grown in virtually every area, utility scale, EPC, rooftop, solar pumps. And we are coming out of many of the issues, legacy issues that we had. We've done a few divestments in the last 2 years, and that process continues. And hopefully this year we will be able to get some of the other divestments done, especially the one in Zambia, and also the Arutmin full payment will come in this year. So I think we are virtually coming out of many of the issues. The mining lease, which was pending for some time, that has been extended by another 10 years with the option to extend by another 10 years. So that's a very good move that has happened. We are also seeing some movement on the Mundra thing. Last week, you would have seen Government of India has come with a new set of directions under Section 11, wherein it has asked all imported coal-based plants, there are 13 of them, including Mundra, which should run at full capacity and supply to the procurers with whom they have the PPA. The arrangement is that full pass-through of coal cost will be given. That means whatever is the cost of coal, the shipping, transportation, unloading, and the operational parameters, everything will be given. So it's a very good development. The under-recovery which used to happen in Mundra will not happen going forward, and that will set a new benchmark for further negotiations going forward. Because this arrangement, though is up to 31st October, we do expect that looking into the type of demand of energy in the country and the growth that has been seen, this will get extended, and it will also become a new benchmark for any further negotiations that will take place with the procurer states. So I think many of the issues that were challenging us, we are coming out of it. We also have completed the transaction for the renewable platform, where we have our investors over here, both BlackRock and Mubadala have come in, and the transaction, the first part of the formation of company and getting part of the money will happen in the month of June. So I think we are moving in the right direction. Everything that we had planned for in last 2 years is getting completed, and going forward, you will see very good performance on strong foundation for Tata Power.
Okay, just a couple of points that I want to scratch from quarter four before I talk about what could happen ahead, though you've enumerated very well what could happen ahead, Dr. Sinha. One is what most people have raised this point when I looked at the notes as well, that sequentially the coal average selling price has come off. The growth is below the growth in the HBA index as well. In such an environment, would you have hoped for more? And can this improve in quarter one of FY23?
So we should look at it in totality rather than looking at it for one quarter or part of the one quarter. The last quarter, let's look at the coal company. We had in Indonesia a ban in export of coal. in the month of January, and they had to, whatever coal was there, they had to supply to the local Indonesian generating companies, which are government owned. It is at a flat price of $70, though the international market prices were at nearly $200 at that time. That is now behind us. Secondly, in the month of February and March, which typically are monsoon months in Indonesia, there were very heavy rains. Unprecedented rains happened, which led to flooding of the coal mines. Normally, we would produce about little more than 5 million tons of coal on those mines and sell. Unfortunately, because of heavy flooding and pumping of water that took place, we could only produce about 3.5 to 3.6 million tons. That brought down the overall sale of coal in the first quarter. But now that things have stabilized, we are expecting that the coal prices will continue to be higher. The HVA in April was 288, the HVA in May is 275, and we expect in the balance of the year, it will be in the range of about $250 in that range. And we expect a very good performance by the coal companies in the coming quarters. So this is a good time to be in the Indonesian coal business. Secondly, on our Mundra, we ran only one unit in the first quarter because we could not come to a settlement on the tariff with the procurer states. Since April, we are now running 4 units. Right now, we run 4 units. Consequent to the government order, we will be getting full pass-through of coal and the operating parameters. So we will be positive in EBITDA, and also there will be huge upside on the revenue because the units will be operating virtually at 100% availability. So I think many of the things which were there, which are legacy issues, we have overcome them. And going forward, it is in very strong footing and very strong foundation to grow from here and take it forward.
So just some minutiae, Dr. Sinha, you saying that the losses at Mundra, which had widened, would narrow because of the operational metrics that you spoke about just now, and the coal volumes will also likely come back to near normalcy, so to say, and therefore we'll not see the volume drop as well. And therefore both of these, which had some chinks in their armor in Q4, will kind of overcome that starting Q1 itself. Is that a correct assessment?
You are absolutely right. And we will see huge improvement in both these areas.
Okay, great. The renewable IPP and the EPC businesses, some people would say that while these are largely strong, maybe the utilization levels were a bit lower and material costs were higher. Now I reckon material costs are probably still going to be high or still going to stay high. How do you envisage that to shape up for FY23, if not just Q1?
So what had happened last year that the prices went up very much on the higher side, which was not anticipated. And this was not only prices of the solar panels, but also commodity prices. Steel went up, copper went up. And these were not anticipated when we had taken the order more than a year back, and which were executed in the last financial year. Subsequently, all the orders that we have booked have considered the higher price of commodities and has also considered higher prices of cell and modules, because we know that the BCD would come in effect from 1st of April, and it was all accounted for. So going forward, we are much better hedged on the prices of the cell and modules. Those have already been considered and are part of the offers that we had made. And so our margins will not be as strained as it was in the last financial year.
So what about the utilization, sir?
The utilization of all our renewables have been phenomenal. In fact, all our solar plants are virtually running at 100% availability. Similarly, our wind plants are more than 98.5%, which is actually the industry benchmark. We are much higher than any other operator in the country. So a huge amount of technology interventions have helped us in improving our operational parameters, and we will continue to work on that to see that we are at full level of availability and generation from renewable projects.
So compared to estimates, because they were down some 300 basis points, especially solar, the utilization levels, you don't reckon that will be the case going ahead? You reckon that will come back to?
Yeah, absolutely.
Okay.
Of course, what sometimes happens in some quarters is that there are a lot of weather pattern changes which takes place.
Sure.
And unseasonal rains, unseasonal heat waves, unseasonal wind speeds are sometimes impacting. But on an overall basis, if we look at full 12 months, we are virtually over there. There's very little loss that we have or underutilization that we have on a year-to-year basis.
Okay, and you're hoping that the same would continue or maybe improve FY23. Okay, let's wait and watch as the quarters go by. A CNSA note, Dr. Sinha says that Tata Power undershot its 2 gigawatt per annum wind target for its renewable IPP businesses due to entry of large players, making the 15 gigawatt target by FY25 difficult. What will you say?
So I will only say that last week itself, we won one of the biggest bids, 600 megawatt of hybrid solar and wind. So our actions will prove that we will do not only 2 gigawatt, but much more than that.
Okay, so the target for FY25 does not seem difficult as per your assessment.
Not at all. In fact, we have always exceeded our targets, and you will see that in this also we will exceed our target.
Okay, Dr. Sinha, I have time for 2 more questions with you before you have to go for other conversations. One, as you look ahead to FY23 and FY24, what are the key catalysts for Tata Power? Some people would argue that the stake sale in the RE business has happened. To an extent, some of the other catalysts have played out. Coal prices continue to remain a catalyst, but don't know how long they'll stay that way. If indeed there is some truce, God help, there is some truce out there in Europe. So what are the key catalysts according to you for Tata Power going ahead, FY23, 24, 25?
I think the catalyst is that climate change is real. Renewable projects will happen. And renewable, it's not only utility scale, but it will also be large number of rooftop solar and solar pumps. Retail business in renewables will play a very, very critical role. Industries, commercial establishments, residential buildings, all of them will become slowly renewable power based. And Tata Power, because of its presence in most of the cities, more than 100 cities we are present, and the type of service that we provide and the type of solutions that we provide, we will continue to be the biggest player in these retail businesses. In addition to that, because of the enhanced renewable that will come, both for utility scale as well as EPC, we will become one of the biggest, both in terms of manufacturing and in terms of EPC for renewable projects in the country. Even last week, we won a 1,000 megawatt project from SJVN for 5,500 crores. That takes our order book to nearly 13,000 crores from the 31st March of 7,500 crores. So I think you will see that we will have a huge play in the renewable business. The second area that you will see that we will have huge play is in transmission and distribution. We've stabilized operations of distribution in Odisha. In first year itself, we have shown a profit by all the 4 discoms. And the change has been phenomenal in terms of customer service, reliability, technology, and also the financial performance. So I think going forward, you will see that we will play a very critical role in the distribution business in the country, as and when the delicensing or privatization of distribution sector opens up, whether it is in urban areas or rural areas, we will play a very, very important role. The other area that we will also be doing a huge amount of work is that we will be doing a lot of work in transmission area. Transmission, 2 of the projects that we recently won in UP. Going forward, we will have more of transmission projects coming up, apart from the Mumbai transmission, which has been growing in last few years. So I think we are going to be a mix of regulated and non-regulated business, mix of B2G and B2B business to B2C business. And you will see huge amount of technology interventions in all the areas that we would work. So data analytics and technology will be play a very critical role as we move forward. So it's a very transformative journey for Tata Power going forward. And we are very excited about the opportunities and the type of solutions that we will bring.
Got it, sir. 30 more seconds before we wrap up. One last question. It's an uncertain FY23 for most businesses. You're sounding confident right now. What are the one or two things that you believe could be challenges for Tata Power for FY23 specifically? 30 seconds and then we are done.
So the uncertainties of war, uncertainties of COVID, these are things which we never had planned or had thought about it. These are the type of uncertainties which are there. From our side, we have calibrated and taken care of many of these aspects which had impacted us from the direct business operations point of view. But the external market, external things are something which we are not aware of. And that's the only uncertainty. As far as the business operations is concerned, I think we have full control on each and every aspect of our business operations.
We will take stock of some of these at the end of the Q1 conversation, Mr. Sinha. But thank you so much for taking the time out and speaking to us today. And all the best for the quarters to come.
Thank you. Thank you very much, Neeraj. Always a pleasure.
Likewise, sir. And viewers, thanks for tuning in.